All right, folks, let me lay it out for you straight. No beating around the bush here. Over the last couple of decades, China has been on a major shopping spree all over Africa. We're talking big money, over $140 billion poured into roads, railways, ports, you name it. By 2020, nearly every African nation, 49 to be exact, had jumped on the bandwagon of China's Belt and Road Initiative. That's a whole lot of infrastructure. Now listen, the trade numbers between China and Africa are staggering. Back in 2000, trade was sitting at about 11.67 billion. Fast forward to recent years, and it's ballooned to a whopping $257.67 billion. China has raced past old-time players like the UK and even us, the United States, to become the top trader with Africa. And let's talk investments. Chinese foreign direct investment shot up from a mere $75 million in 2003 to $5 billion by 2021. But here's the kicker. The West is crying foul, calling this a debt-trap diplomacy. They claim China is playing a game, handing out money for projects these countries can't afford, just to get them under their thumb. Take Zambia, for instance. They owe China about $505 billion, which is no small change. That's around 30% of their external debt and about 20% of their GDP. Then there's Uganda, sweating bullets over possibly losing control of the Entebbe International Airport because of the fine print in their loan deals with China. But let's flip the script for a second. Proponents are saying, hold on. China's not just throwing cash around, they're building stuff. They've got Huawei connecting folks left and right with digital tech in 40 African countries. And those Chinese-built railways, like the one from Nairobi to Mombasa, are vital for local economies, driving jobs and business opportunities. Now, the West likes to point fingers about the economic risks and the murky details in these loan deals, claiming they threaten the sovereignty and financial stability of these nations. But on the flip side, some folks argue that these criticisms smell a bit like old-school colonial sour grapes. They say China's stepping in where Western countries have dropped the ball on infrastructure needs in Africa. So, what's the real deal here? Is China the big bad wolf the West makes them out to be, or is this just a new highway to mutual prosperity? Let's keep our eyes peeled and see how this plays out, because one thing's for sure, it's changing the game in Africa. Folks, today we're diving deep into the dynamics of China's dealings in Africa and why it seems African nations are cozying up more to Beijing than to Washington or Brussels. Plus, we're stacking up China's playbooks against the West's latest initiatives, Europe's Global Gateway, and America's Build Back Better World, B3W. Let's break down these strategies and see who's bringing what to the table. Let's start with the Western approach. The US and Europe, they've long been the big brothers in Africa, focusing on aid, social services, think healthcare, education, and tackling poverty. This aid often comes with strings attached, conditions about how governments should run, transparency, human rights, the whole shebang. This can slow things down, making urgent funding as slow as molasses. Remember the huge push against health crises like HIV, AIDS, and Ebola? That was mostly the West doing their part. Now, flip over to China. Their game plan? Infrastructure, infrastructure, infrastructure. They're laying down billions on roads, railways, ports, major building blocks for any country's economy. This is all under their Belt and Road Initiative, BRI, aiming to pump up global trade routes and connections. By 2020, nearly every African country, 49 to be exact, was on board with BRI. Projects like the Mombasa-Nairobi Railway are just the tip of the iceberg. What's more, China doesn't nag about politics or governance when they fork over the cash, which sure as heck appeals to a lot of African bigwigs who don't want any lectures with their loans. So, what's the word from African leaders themselves? They're shouting loud and clear that they'd rather roll with China's straightforward infrastructure and trade deals than with the Western model of aid with a side of moral oversight. They see building stuff as the fast track to grow and develop their economies. They want to be seen as trade partners, not charity cases, lining right up with their visions for development through robust trade and solid infrastructure. Now, I've got to ask for a quick favor. If you're finding this discussion enlightening, smash that like button. Your likes and comments not only mean the world to us, they also help more people get informed. And if you haven't already, consider watching the whole video to support our channel. We really value your engagement, and it helps us keep bringing you these deep dives into what's happening around the world. Thank you for being part of our community. Now, let's dive deep and size up some of the major league projects China's been hammering out across Africa. This isn't just about throwing cash around, it's about laying down some serious infrastructure that's changing the game on the ground. Take Kenya, for example. The Mombasa-Nairobi Standard Gauge Railway, that's a beast of a project. Completed back in 2017 with a hefty price tag of $3.8 billion, this railway has chopped travel time between Mombasa and Nairobi from a grueling 10-plus hours down to just about 4.5 hours for folks, and even less for goods. Financed primarily by the China Exim Bank, this rail line boosts Kenya's cargo handling to a whopping 22 million tons a year and has been a job machine, creating about 25,000 jobs. It's not just about moving people and goods faster. This railway is turbocharging Kenya's economy, adding a solid 1.5% to the GDP. Now, let's jet over to Ethiopia with the Addis Ababa-Djibouti Railway. Completed in 2016, this 756-kilometer track is a lifeline, connecting landlocked Ethiopia to the bustling port of Djibouti. Clocking in at around $4 billion, funded mostly by, you guessed it, China, it's the first modern electrified railway in East Africa. What used to be a 3-day trek for freight now takes less than 20 hours, slashing costs by a third. This railway isn't just moving goods, it's also boosting port activity in Djibouti by 20%, paving the way for regional economic integration. Shifting gears to Nigeria, the Abuja-Kaduna Railway is another headline grabber. Finished in 2016, this 186-kilometer track links Nigeria's capital with its commercial hub, Kaduna. Built for $876 million by the China Civil Engineering Construction Corporation, this project has supercharged connectivity, reducing travel time between the cities to about an hour for passengers, with cargo getting a brisk run too. It's not just about faster travel, it's about economic stimulus, creating thousands of jobs, both during construction and in ongoing operations. Now, to put all this into context, let's rewind and look at the historical ties between the West and Africa. From the 1950s to the 1970s, as African nations waved goodbye to European colonial rulers, the West, particularly the US and Europe, stepped in with the IMF and the World Bank to prop up these newborn countries. They poured funds into building critical infrastructure like roads, schools, and hospitals. This wasn't just about goodwill, it was strategic, aimed at stabilizing these nations and getting their economies off the ground. But let's step back to the 60s and 70s, a pivotal era when the Western investment playbook saw a major pivot. Initially fired up to fund grand infrastructure projects, Western interests shifted gears towards aid and social services, leaving much of the legacy infrastructure, crafted during the colonial times, to crumble as support dwindled. It was a move from building to aiding, from concrete to concepts. Enter China. During the same period, while the West was recalibrating its focus, China was ramping up its game in Africa, not just with money, but with ideology. Back in the 60s, as Africa was shaking off colonial chains, China was there, not just cheering from the sidelines, but jumping into the fray, supporting anti-imperialist struggles and pushing for unity. This wasn't just talk. The construction of the Tanzania-Zambia Railway, TAZARA, a massive project funded and built by China, was a bold statement of China's commitment to an Africa unshackled from colonial influence. Fast forward to the early 2000s, and you see China shifting gears from ideological support to economic powerhouse. This new chapter wasn't just about expanding markets, it was about weaving political threads into the economic fabric of Africa. Armed with the experience and capital from its own meteoric rise, China began rolling out infrastructure projects that were vast, fast, and financially tempting for many African nations. The numbers tell the tale. China-Africa trade catapulted from a modest $11.67 billion in 2000 to a staggering $257.67 billion, overtaking long-standing partners like the UK and the US. Chinese foreign direct investment, FDI, followed suit, peaking at $5 billion in 2021, although it dipped to $1.8 billion in 2022. A standout moment came in 2008 when the Industrial and Commercial Bank of China, ICBC, snagged a 20% stake in Standard Bank of South Africa. But it's not just about trading and investing. China's footprint includes railways, highways, power plants, infrastructure that powers nations. These projects, often underpinned by loans and grants, are part of China's broader commitment, like the whopping $60 billion pledge at the 2015 Forum on China-Africa Cooperation. So here's the big question. As China paves roads and lays tracks across Africa, what's the West doing to keep up? Is the shift from infrastructure to aid a strategic misstep or a different kind of investment in Africa's future? China's investments in Africa are strategically focused, with a hefty emphasis on sectors that drive economic engines: mining, construction, and manufacturing. From 2000 to 2022, the narrative is clear. Africa's exports to China are predominantly primary commodities: oil, copper, iron ore, reflecting the continent's rich natural resources. In return, Africa imports manufactured goods from China, like electronics and textiles, showcasing a classic trade pattern where raw materials head one way and finished products the other. Let's talk numbers. Between 2000 and 2022, Chinese lenders shelled out a whopping $170.8 billion in loans across the African continent, with a fat slice of that pie going into the energy sector. But here's where it gets tricky. Such massive loans have sparked intense debates about debt sustainability, with countries like Angola, Ethiopia, and Zambia finding themselves in hot water as some of the top borrowers. Now, let's zoom in on a couple of standout projects. Over in Ethiopia, the Grand Ethiopian Renaissance Dam, ERD, is making waves, literally. Poised to be Africa's largest hydroelectric dam, this behemoth aims to crank out over 6,000 megawatts of electricity each year. With the project 94.6% complete as of now, it's not just about keeping the lights on. It's a game changer for Ethiopia's ambitions to power up its industrial sector and ship out electricity across the region, potentially raking in about $1 billion annually from exports. The price tag? A cool $4.8 billion. Chinese firms aren't just onlookers here. They're knee-deep in the construction and financing, making GERD a poster child for international collaboration on mega projects. Switching gears to Zambia, let's dig into the mining scene. Chinese investments have turbocharged Zambia's copper industry, cementing its spot as a key player in the global copper market. Take, for example, the $1.3 billion splash by China Non-Ferrous Metals Mining Corporation (CNMC) in the Chambishi copper mine, or the recent $832 million investment in the Southeast ore body mine, which promises to extend the mine's life by over 2 decades. These moves have not only boosted Zambia's copper output by 10.6% in early 2024, but have also reinforced its position as Africa's second-largest copper producer. More than just digging up copper, these investments are a lifeline to the local economy, spawning thousands of jobs and transferring much-needed technology and skills to the Zambian workforce. Indeed, as we peel back the layers on China's financial engagements in Africa, the narrative is complex, shadowed by accusations from Western countries of a so-called debt trap. Understanding the structure of Chinese loans is key to demystifying these claims. Types of Chinese loans. China's financing in Africa is multifaceted, tailored to fit a variety of developmental needs, from humanitarian aid to large-scale infrastructure projects. Here's a breakdown. 1. Zero-interest loans. A slice of China's foreign aid pie, these loans bear no interest and aren't just about money. They're a diplomatic handshake. Primarily aimed at social and humanitarian projects like schools, hospitals, and water facilities, these loans foster long-term goodwill and are indicative of China's soft power strategy in Africa. 2. Concession loans. With interest rates below market level and extended repayment terms, these loans are the workhorses behind the mammoth infrastructure projects that have become synonymous with China's footprint in Africa. Managed by powerhouse institutions like the China Exim Bank and the China Development Bank, these loans are designed to be manageable for the borrower, thus supporting sustainable development without overwhelming the recipient nations. Number 3. Commercial loans. These are the sharp tools in the shed, offered at market or higher interest rates, targeting projects that can pull their financial weight. Directed towards sectors like mining, telecommunications, and large infrastructure, These loans are facilitated through Chinese commercial banks and are structured to ensure profitability and commercial viability. Western concerns and initiatives. The specter of debt traps raised by the West centers around the fear that Africa's sovereignty is at risk, tethered by unsustainable debt levels to a single dominant creditor. In this light, Western powers are not just spectators, but active players seeking to counterbalance China's influence. New Western initiatives. Reacting to China's Belt and Road Initiative, the West has rolled out its own frameworks. Global Gateway, European Union. This initiative aims to knit a web of high-quality infrastructure across various regions, including Africa. The EU's strategy emphasizes transparency, sustainability, and democratic values, presenting itself as a values-based alternative to the BRI. Build Back Better World, B3W, United States. Launched with much fanfare, the B3W seeks to provide a sustainable and transparent infrastructure development alternative. It focuses on digital technology, climate, health, and gender equity, areas where the U.S. believes it can lead by example while promoting democratic governance and environmental sustainability. The strategic undercurrent is clear. Both China and the West are vying for influence in Africa through infrastructure, each offering their vision of development. For African nations, these global giants provide opportunities and challenges, offering critical infrastructure that could propel economic growth while also posing significant financial risks. How Africa navigates these waters will significantly shape its future sovereignty, economic stability, and developmental trajectory. In today's deep dive, we unpack the European Union's Global Gateway and the US's Build Back Better World B3W initiative, two ambitious programs aiming to reshape global infrastructure, particularly in low and middle-income countries, by 2027. Both programs stand as the West's answer to China's expansive Belt and Road Initiative, BRI, but with a distinctive Western twist focusing on democratic values and sustainable practices. Global Gateway, EU. Unveiled in 2021, the EU's Global Gateway strategy is setting the stage to mobilize up to 300 billion euros in investments. This isn't just about building stuff. It's about creating smart, clean, and secure links across digital, energy, and transport sectors, while also bolstering health, education, and research systems globally. The Global Gateway is crafted around the principles of democracy, good governance, and transparency, aiming to spark private sector investments that are not just profitable but transformational. Build Back Better World, B3W. Launched by President Biden and the G7 in 2021, B3W is designed to bridge the massive global infrastructure gap. With a keen focus on climate, health security, digital technology, and gender equity, this initiative is all about rallying private capital to deliver infrastructure that's not only high in quality, but also sustainable and transparent, aligning snugly with the goals of the Paris Climate Agreement. Comparing to China's BRI, China's approach with BRI has been heavily weighted towards hard infrastructure. Think ports, railways, and power plants. In contrast, both the Global Gateway and B3W are betting on a mix of hard and soft infrastructure, with hefty investments in areas like digital technology and social infrastructure, including health and education. However, the Western emphasis on democratic processes and good governance does mean these initiatives might roll out more slowly and with more complexity compared to China's more streamlined, rapid-fire deployments. African perspectives. How do Africans view these Western-led initiatives? It's complicated. There's a historical shadow here, with many in Africa viewing these new initiatives through the lens of past colonial endeavors, wary that these projects might prioritize Western interests over local needs and potentially repeat old patterns of influence and control. The skepticism isn't just casual, it's rooted in a historical context where foreign interventions often came with strings attached. As we wrap up this exploration, it's clear that while the intentions behind these initiatives are to provide alternatives to China's BRI, the true impact and reception on the ground in Africa will play a critical role in determining their success. Will they be seen as genuine partners in progress or just a new wave of influence peddling? Only time will tell. Thank you for tuning in. If you found this analysis enlightening, don't forget to like, subscribe, and click the notification bell to stay updated with our latest content. Your support means the world to us, and it's what keeps these conversations going. Check out our next video right here on the screen for more insights.